Good morning, everybody. Thank you for joining us for another edition of our weekly real estate backstory. We like to start off every week kind of going over the comings and goings, the things we see happening in the real estate market and how it impacts us here in the Atlanta area. My name is Alan Richardson. I'm the managing broker here at Maximum One.
My name is Ming Richardson, the compliance broker for Maximum One Realty and Realtor Partners.
And we just kind of want to start off by talking about, we know that there's a lot of talk about the market shifting and going to a more balanced market. And we agree that really is what's happening. For the average consumer, they're not seeing a drop in property value or a significant decline, or no decline, really. They're just seeing the amount of appreciation slowing. But for realtors, for our real estate folks, the number of transactions has been slowing down. We're seeing a drop in inventory levels, things like that. And so, it's for a lot of agents, it's time to really look back and say, what do we need to do? If there is going to be a slowdown slump, or if there is going to be the market going back to a more balanced market, what are you going to do about it? Because we saw this back in 2008 and even in 2000 and 2002 with the dot-com bubble, that folks that don't who just react.
Right. Rather being reactive, let's be proactive. So, one of the things that we talked about among ourselves is one, to get rid of your debts, cut out some of your redundancy, cut costs where they're wasted. So
be smart with your money.
Right. And so where you have certain things that you have monthly fees, look at those to see whether or not you are truly using that particular software or product. If you are not, go ahead, find another way to redo it without the cost.
Double down on your marketing. Now is not the time to be cutting back on marketing. Now is the time to be doubling, tripling your marketing, because now is the time when we're really going to be searching for sellers. We're really going to be searching for qualified buyers. So not marketing right now is folly. Okay, that's a big deal right
there. When he's in marketing, doesn't necessarily mean that you have to go out and buy leads. Okay, this means that use your sphere, use equity, send more appointments, schedule yourself for those items. And that, in real estate, it's true and tried. When you have a routine that you prospect, you definitely will get the volume.
So that prospecting 1 hour a day is so crucial to building your business, on a very upward trajectory. Find agents who prospect consistently at least an hour a day will constantly grow their business. But that kind of stems off of, you've got to have a schedule. So many agents still just kind of work off the whim. Like, what are you going to do today? I don't know. We'll see. And they just kind of wait and see what comes along. And if you wait and see what comes along, then you're leaving your business up to chance, to fate, that kind of thing. So looking at all of our processes and systems and, how we go about handling buyers, handling sellers, that kind of stuff, it's a really, really big deal.
Absolutely. So, communicate with your clients, y'all. There's nothing worse than not to communicate. Even your past client that you haven't talked about 2 or 3 years, call them, do a wellness checkup. And you'd be amazed how much conversation and how much you'll learn. If nothing else, they may refer you to someone else.
Well, and just folks want to know what's going on with the market right now. That's a really big deal to folks.
And you're the expert in the market.
Yeah, they'll be glad to talk to you. So, also, there's a lot of talk about the different markets that are the most vulnerable kind of thing, and so there's some talk of folks who are like, real estate values will be dropping, will be declining, things like that. And however, there's only 3 states that have the 33 of the 50 most vulnerable markets are in 3 states. Period.
Want to know where they are? New Jersey, Illinois, Jersey, and California.
Yep.
That's where, because they were
they saw a lot of appreciation.
Correct.
And so these are the markets where, on a national level, you are going to hear people talking about, well, this, prices are dropping here and here and here. 33 of those 50 markets are not none of them are in Georgia, first of all, kind of thing. So here in the Sun Belt, here in Georgia, we're in really good shape when it comes to that side of things. So we just kind of wanted to understand that. Sorry, I didn't mean to cut you off. But real estate's local and at least on the state level, but then even more regional. We're going to see where there's still some parts of Georgia that are going to still stay in double-digit property appreciation kind of thing, even when other ones start to flatten out.
And this report, it was based on affordability, unemployment, and measure like property tax, underwater mortgage, and foreclosures through the second quarter. So this is how these 3 states would identify.
Yep. Now, on the positive side of things, guess when the best time to buy a home is in the state of Georgia?
Last week of September.
Right now, actually, yeah, now through the end of September is the best time based on the number of properties on the market, the active listings versus coming onto the market, how many price reductions have been taken out. This is the best time. So like being able to engage with your buyers, now is the time. We shouldn't be waiting for this.
And the reason why is the best time. September are traditionally coming off from August. September is traditionally the lowest month of purchase. And so therefore sellers think twice about their pricing, and therefore a lot of reduction is being done first week and second week of September. So by third and fourth week, typically that is the best time.
They're looking at about 46% more listings coming on the market or being in the market this time of year right now.
Correct.
Than during the summer and that kind of thing, because you have a lot of less, a lot of seasonal where the number of buyers kind of goes down this time of year anyway. And normally we have inventory tick up a little bit, and the ones that have been on the market are more willing to take price reductions. This is a really good time for us to.
And also seller feel like that, for folks that are moving during midterm of the year for school and stuff like that, they need to get their house on the market now for December purchase.
Now, inflation came up another 1/10 of a point, in August. And so, you can kind of see what's happening with the consumer price index long term. We had been seeing a little bit of a drop, and then it just kind of ticked back up again, and that threw the markets into an absolute tizzy. And so, basically the market is expecting the Fed to come out this week, Wednesday of this week, and announce another 75-point basis. It could be a full point. But they're trying to control inflation is really the big deal here. And so so the markets react before the Fed actually does what they do.
And sometimes it just have to be a comment from the Fed and the market goes crazy.
Well, when those inflation numbers came out, the market, immediately the 10-year treasury went up, and when the 10-year treasury goes up, the mortgage rates go up. So we hit 6% for the first time since like 2008. And so the more volatility that we have in our market, the more volatility we're going to have in interest rates right now.
Correct.
Now, of that, probably one of the biggest areas that's seen the biggest, well, I keep saying biggest, but the greatest impact is happening to refinance. There's literally the refinance market is absolutely completely dried up right now.
And the reason being is that, who wants to take a 6% rent versus what we have before December around 3%. I mean, huge.
Now we have two positive things happening in the mortgage industry. One is that Congress is getting closer to kind of poking the VA so that they'll update their appraisal requirements. This is something that we've been wanting to see for so long, because unfortunately our veterans, when it comes to the appraisal process, are not playing on a level playing field with FHA or with conventional. And so it'd be great to see those VA requirements becoming much closer to the other traditional major loan products out there. And then the other positive we saw is that everyone's kind of looking, like the default rate in the US is historically low. There is no big foreclosure market coming. There's nothing like that. And so with this really low default rate, why do we have to have FHA premiums
for the lifetime of the loan versus in the past?
This is a mortgage insurance. Why are we having to have such a large mortgage insurance for the lifetime of the loan? This is just an unneeded expense. And the only person who benefits out of that is the bank.
And the reason being is that during downturn market, they really, really took a huge hit. And I think it's a recuperation from the downturn market. But at this point, in the past, back in prior to 2000, I want to say 14 or 13, don't quote me on it, is that, we were able to request a waiver of the FHA premium once you have exceeded 80%, well, less than 80% of your loan value. So, FHA made a ruling where that's no longer valid, that it goes through the lifetime of the loan. And I understand they were trying to recover from the downturn market.
But they've more than recovered now. So
correct.
It's
and
time
so
to
now the FHA are pushing Biden to get that released to where it's only 20% versus a lifetime of the loan.
Well, that would be a really great thing. Now, overall housing trends, we're still seeing double-digit price value increases. In overall equity growth is still in the double digits. It's not healthy. We want to see that tapering back down a little bit more. We really do. New listings, however, are down 13%. They were down 16% last week. They were down double digits the week before, that kind of stuff. So overall,
time on the market
is a little bit higher, 6 days longer. We're still only at 2 months of standing inventory. We need 6 months of inventory to be a flat market.
And the reason why time of market is much longer is because the interest rate buyer is still holding on to hoping that the interest rate will come down.
Well, but the other challenge here is that the sellers are hitting the pause button. Right now, what we're seeing on the market is kind of like what we're calling it is mortgage rate lockdown. You bought a home at 3.2. So being able to sell and then go buy a home at 6.2 is not something a lot of our sellers are willing to do right now. And so we're seeing where, the number of new listings coming on the market is really like down significantly. You can see like all the way back in 2014, 2015, how many homes we had on the market. We're going through normal seasonal trends here for sure, but we are down big time. And a lot of it comes down to this mortgage rate lockdown, and until we see the mortgage rate start easing back into the low fives, I think we're going to keep fighting this battle right here. And so
we're going to have an issue with housing affordability. That's about
we already have that. Exactly. Now on the positive side, as far as that goes,
well, before you go on the next screen, just really quick, do talk to your lender. There are some lenders that have a lot of DPA program. Atlanta Invest has a DPA program that's available. Not every lender is available for those programs, so talk to your lender. I know our lender here, McDonough and Airport, do a lot of DPA. And as well as the one in Fayetteville. So anyways, have a chat.
Please. So as I was saying, the positive side of this is that our average homeowner equity is huge. The average equity gain between 2021 and 2022, a year ago to now, is $60,000. And it was $55,000 the year before, kind of thing. And so like if you bought a home a year ago, you average $60,000 in equity. Now these are national numbers, but here in Georgia, that number is actually $65,000 is the average equity gain in the last year. And you can see some places are triple digits. Florida and California is over $100,000. Georgia is about $65,000, which is still on the high side. But that just shows that we're a really popular, strong market right here. Now, the other thing that has been a really positive sign here is that this is the national negative equity. How many homes have negative equity? And just to kind of give you a reference point, at the height of 2008, when we had our last market crash, it was right at 29, almost 30% of homes had negative equity. Here in Georgia, 1.7%. So it's so 99 out of 100 basically homeowners have positive equity in the state of Georgia. This is why, last time we checked, there was only 6 HUD homes for sale in the whole state of Georgia. We're just not seeing where folks are upside down. I do think that if we do move heavier into a recession, things like that, I do think that will kind of drive some people to sell, but they have equity. That's the big deal here, is that they have equity. The average here in Georgia just a year ago, $65,000. That's a big number right there.
It is a big number.
Now, there was a new study that came out from TKI Analytics kind of thing, and they say that households with school-age kids are most likely to buy a home in the fall. 1 out of 4 buyers will one of the great things to key on is households with school-age children. Nearly 1 out of 4 of our sales through the rest of this year will be to families with school-age children. Now, in contrast, it's not on this graph, but in contrast, right now about 75% of our sellers are sellers without any children at all. And so that's a very interesting, two good points to be looking at right there for us to be able to key in on who should be
who's your buyers and who's your sellers.
Yeah, there you go. Now rents hit a 17-month record high. So the idea that I'll just rent because properties, interest rates are high, real estate's high, property appreciation has been going up, I'll just rent. Well, guess what? Renting is not a safe haven for our renters. And so while I know that the interest rates don't make it easy, and for our first time buyers, that's where it's really, really tough. Because if you have to sell and buy, you've already captured a lot of that equity. You've already been in a really good position. But for our first time buyers, they don't have any equity coming into this thing. And so I know that that's the case. But that being said, this is that a homeowner has 40 times greater net worth than a renter. And see, wealth is tied up in home ownership in the United States. So you can see that the average net worth of a renter is $6,300 versus just the average net worth of a homeowner is $255,000. So it's one of those things where home ownership is a big, big deal. And so, the old rules really still do apply. If you are only going to live in a house or live in a place for 3 or 4 years, then renting is probably going to be okay. If you're going to be there for 3, 4, 5, more than 4 years, then buying is still going to be the right choice for you to make. And with the rental increases, it's not like it's easy to rent. If you've been representing clients and looking in the rental market out there, that is not a friendly place. And in a lot of cases, you got a first plus last plus security deposit plus pets, and the list goes on. A lot of times that can be more than the 3.5% you'd need for an FHA. And so we want to wrap up with this. Who bought houses over the last year? So right now, our Gen Z is still making up a really small group, but our younger and our older millennials is making up 37% of our group. 37% of our buyers are millennials. So that still continues to be our number one target group, because we have millennials now broken into younger and older millennials in there. After that comes in with our Gen X, then our boomers, which actually, if you put younger and older boomers in together, they're actually the second largest group. But if you have basically the 56 to 65 group, those are retirement, and the 66 and older, that tends to be our retirement group on there. So
just want you to know where the clients are coming from and who you need to talk to, and not just you guys. There's really plenty of business around, so target a market that you are most comfortable in associating with, but also look at what other opportunities there may be. So just look at if you're in my age, we have kids that are now
we're Gen Xers.
Thank you. We have kids that are younger, Gen Y, so millennials, and so ask your kids' friends.
Mm-hmm.
Because I'm sure you had some impact in their life while growing up at one point. So reach out to them.
Now, National Association of Realtors released the study on where homeowners stay put for the shortest amount of time. And Georgia came in at number 7, or Atlanta came in at number 7. Folks in Atlanta, we tend to move right between every 6 to 7 years. And that's one of the shortest, actually, it's the shortest amount of time for any major metro in the United States. And so for us in the real estate world, that really is kind of a positive thing, because we get, the more people move, the more times they buy, the more times they sell. That's a great thing to have.
Absolutely.
Right there. Our replays came out on the 17th of last week. Sorry.
It came out this morning.
Okay, this morning, 7
It's okay. It come out today on the
Sorry, my
19th.
brain.
So we encourage you, so for those of you that did attend some of the summit, couldn't attend all of it. Call our branch manager, set up an appointment. We have 2 areas where we can play at multiple times. So please come in and take advantage of Ferry Summit. I feel like this year's summit was one of the better ones. Had a lot more what I consider marketable materials that you can apply to, and it just is such a good one this year. So if you are ready to start off your business and kick it off in gear for 2023, please come in and take a moment.
And then if you need your Max One swag for a lot of our Max One agents, you can go to max1market.com and you can get all of your logoed Maximum One things like that. This week on training. So tomorrow I'll be teaching RE Contracts 101. That's going to be in our Newton office. And
we actually did an airport on Friday. And let me tell you, some of the agents were amazed of the difference between RE contract versus SCAR. And I understand most of us use SCAR, but you do need to know when you're being presented RE contract, what that means. And yes, you can always counter and GAR contract, just so you know.
Now also tomorrow, we also have Intro to Connect MLS. Georgia MLS is switching over to the Connect MLS.
Versus the Paragon.
Well, right now they're keeping both and they're working together, and you can use Paragon and you can use Connect MLS. We don't know if or when they're going to switch out of it, but this is something that you don't want to wait on.
Correct. And there's nothing worse not knowing your craft. So especially when it comes time to write a contract and it's 9 p.m. at midnight on Friday night, and you try and reach a broker or your mentor, I can tell you right now, they're probably out with their friends or in bed.
So estates, divorces, investors who can sign a contract, that's in our airport office on Wednesday. Now the title the class is so much better than the title gives it a name.
Actually, it tells you about, this is a class that you can find out how you can lead you in a different area versus a traditional real estate. So this is a really great class, if nothing else, for knowledge.
And then on Thursday, I'll be teaching fast top dollar home sales with staging in our Fayetteville office. So, and I think that staging is one of the most important things, but one of the most important things you can do to help market yourself and grow your business, as well as sell homes for more money in the shortest amount of time possible. You guys have a great week. If we can be any kind of service, please let us know. All right. Bye.
Take care.